Hey everyone, welcome to Talking Tokens, a podcast focused on interviewing the best crypto founders, market players, and up-and-coming startups that are changing the industry every single Tuesday and Thursday. I'm Jacqueline Melinek, your award-nominated host and former senior crypto reporter turned entrepreneur, and I'm excited to be here with you all. Now, let's get into it. Hello, everyone. Today's guest is Alex Felix. He is CoinFund's managing partner and chief investment officer. CoinFund has been around since 2015 and has invested in over 100 blockchain and Web3 companies across its 6 investment vehicles. I'm excited to get an update on CoinFund, how the venture landscape is looking on the inside, and what Alex is watching as an investor. With all that said, Alex, welcome to the show.
Thank you, Jacqueline. It's great to be here.
Yeah. To start off, of course, I had to take a look at your LinkedIn. I've known you for a while now, but I did not know that you came from a TradFi background. And obviously, it's been a long time. You've been at CoinFund. But looking back, how did you kind of enter this space and why did you enter it, especially in its early days?
Great question. A lot of my TradFi colleagues were trying to figure out exactly what I was doing back in the day. And it was tricky. And as a result, haven't kept in touch with as many as I would have liked. As clearly everyone thought I had a horn on my head, or I was doing something that was totally out of left field.
Right.
But here we are, almost a decade later, and I think for me it was a couple things. One was the formulaic approach to analyzing companies on Wall Street was a little disheartening. I worked with a lot of companies in my TradFi career, and in many ways, a lot of them were distilled down to the same corporate finance analysis that leads you to understand their financeability or your excitement around owning them or investing in them, but doesn't really give you a lot of insights into how these CEOs operate and, what's exciting, what do they think the future holds, and sort of how are they taking big risk in navigating, their various end markets. And that was the stuff I was really passionate about. So I slowly moved down from kind of high finance to, middle market private equity. And in that focus, I had a little more exposure to some subsectors that were quite interesting to me. And one of those was fintech. And spending more time in fintech, I kind of realized that one, it was fraught with regulation. So this is not new for, kind of money to be on the internet and to face extreme scrutiny. There are regulatory regimes out there that, need to pay attention to this stuff. And I think a thoughtful approach and, rules-based regulation will be a great thing for crypto too in the long term. But I, really was focused on, well, but why isn't it native to the internet? And why is it so hard to kind of do anything in fintech that's truly differentiated and meaningful? And Bitcoin came around, and actually, as I was kind of thinking about it, I went back through my email this morning to see the first mention of Bitcoin in my own personal email account. And the first thing was, Camp BX. I signed up for Camp BX in April 15th of 2013. And that was prompted by something. Now, at this point, I can't recall, sort of what got me excited to go check it out. But that's when I first went and bought some, and it was $90, and I played around with it and sort of just tried to understand, what it was. And for me, it was a couple different things. One, it was the evolution of business models. I had experienced the transition from mainframe to SaaS. So people spent a lot of money to form a startup. Then they started renting the infrastructure to form a startup, so millions of dollars to hundreds of thousands of dollars to, hey, something like smart contracts is free to a developer. I deploy the software and it can be accessed globally. And if people start using it, I could start earning money. So it felt like a paradigm shift in the accessibility for people to build things. And usually when you get more people, building things, some great things happen. So I thought just bringing down the barrier to entry and the change in the business model was very powerful. The second was, just this transition to digital. I, had heard it everywhere except in my job where I was still picking up the phone to do everything. Mm-hmm. And I was looking at stacks of credit agreements on my desk and, heavily negotiating very few key terms within them. And so I thought that digitization of everything was a powerful concept to be an early mover and thought leader and, tinker in. And that sort of got me to focus on Ethereum when it came out in 2014. And I read Vitalik's white paper and thought about tokens as just unique instruments to digitize many different things. And the third was smart contracts and codifying business relationships. There are many people on the internet. There are many ways that we would love to do business and try new things, but it's been very hard to get comfortable with all the fraud that did happen in fintech. People forget that PayPal almost went under because of fraud in the early days. Mm-hmm. And so those three things were what kind of got me very focused on it, even though I was in TradFi, and got me spending all my free time, nights, weekends, and to go to crypto conferences in New York, and eventually that led to joining the Coin Fund Slack.
Yeah. It's funny you bring that up because I've heard the saying before. It's like what you do on your weekends is kind of like where your passion lies. So the fact that you were investing time in crypto before you actually got into it full time speaks to that. And on that note, given that you're like full time in crypto, you operate in this space, and now we have traditional institutions, et cetera, kind of looking at crypto or even partnering with crypto companies. I mean, BlackRock just led a round for Securitize. How do you kind of see the evolution of TradFi entering the space? And do you feel like there is like a talent rush, kind of what we saw during the last bull market, or no?
We can talk about talent in a second, but let's talk about the TradFi orientation first. Mm-hmm. TradFi hates taking risk. And if you go talk to any billionaire out there, you go talk to any of these major firms, what they love is kind of a risk-free play to, capture a spread or a fee. And so they love fee-based business models. And, we see this with, certain TradFi firms launching, ETFs focused on a basket of crypto adjacent stocks, or you see this with their focus on stable coins, or with their focus on real world assets and what tokenization could look like. So it's very clear to me that they're using their playbook and they're finding what could be some pretty big blue ocean and trying to prepare for it. But how they do that is going to be more methodical. We've kind of seen within TradFi firms that there's always a couple champions that are totally crypto red pilled. They're, excited about what's going on. They're spending their nights and weekends on crypto. Mm-hmm. And so they need to, sort of educate people, inside out within the firm. And, in our early days at Coin Fund, a lot of the focus was on education. It was like, what are we missing here? I talked to a CIO at an endowment, and he'd say, crypto is not the topic of conversation at cocktail parties. I'm going to in the summer, and I kind of tried to reframe that as it never will be unless people dedicate some time and attention to sort of understanding and learning it. You don't become an expert in anything overnight. There's no amount of sound bites or shilling that people can scream on X or Telegram or Discord that's going to, sort of change your mind until you go through your own, experience of onboarding and learning. And I think that's really an important, point because a lot of people are just very, very busy, and there are very lucrative, financial markets out there that are much bigger than crypto today. So, we have a very patient approach to, sort of what gets people excited about crypto. And we usually approach it from many different angles. New subsectors and actual use cases are the one thing, we need to keep showing from crypto in order to, maintain this sort of pace of onboarding new institutions and getting them excited about it. So, with stablecoins being, one thing that is a demonstrated proven use case, with Tether being one of the most profitable companies in the world, it's clear that there are some places that, TradFi can play here and that they'd love to, dive in on. And for CoinFund, what does that mean? It means our focus is on learning faster than everyone else. It's a nascent asset class. There's a lot of things going on. There's a lot of very smart people, and we have to design our platform to learn faster than everyone else.
Right. I mean, CoinFund's been around for a long time. You guys are one of the oldest firms in the space. It's almost 9 years, I believe. But how are you kind of looking at today's Web3 startup world compared to previous cycles? I know a lot of firms like to say like their strategy stays the same throughout, but obviously, you're looking at new sectors, new use cases, et cetera, like you just mentioned. So how has CoinFund's strategy kind of evolved to keep up with what's happening?
Yeah, it's a great question. And, it's multidimensional in terms of, sort of what's changed and why. From a firm perspective, we've now been kind of given the opportunity to go out there and really be a lead investor. We lead or co-lead almost all the deals we do now. And I think that stat is 75 to 80% or more. So we have the opportunity to spend a lot more time with teams and to really, get comfortable about kind of going through the one-way door. When Jake and I first started, we were not pedigreed in raising lots of money. We were really out there to kind of prove our capabilities through the experience and the track record that we could create more in a smaller follow investor capacity. But back then, the space hadn't matured. There wasn't really the concept of a lead investor. There wasn't even a concept of pre-seed, seed, Series A. It was like, we're a bunch of technologists and we're launching new products. How can you help us? Right. Here's some money. Help us fill some gaps because there's not a lot of money to go around, and we need to do a lot with a little. Today, landscape has matured a ton. We've seen a couple different cycles that have helped to balance, deal structuring in both an investor-friendly and a founder-friendly way. We see most deals as equity so that investors can get the rights that they need to invest professionally alongside with the token potential if any company chooses to launch one. And we see, round sizes kind of rationalizing, through this past downturn. So people aren't raising 10 years of runway like they did in the Tezos ICO. They're raising, appropriately, at least as the asset class matures. And we see the opportunity to work with entrepreneurs that have appreciated how hard the problem is now. At first, no one really knew. They didn't know what the challenges would be. Now we've seen a lot of the challenges, and some of them quite viscerally, in terms of what it takes to build a business in this space. And it's not easy. So the entrepreneur quality has actually gone up over this past cycle as people appreciate the challenges in fundraising. There were 10 firms last year, and we were one of them, that wrote $10 million checks, to crypto companies. The late stage financing markets are all but gone outside of just a couple Web3 firms. The TradFi VCs aren't crossing over like they did after getting burned on some of the lending products. And, but crypto's figured out how to reinvigorate the token markets. And so, having this flexibility, to stay alive, to, find product market fit, to address a global user base and developer base has been kind of crypto's killer instinct, which I love, because crypto companies kind of find ways to win regardless of how the professional investors are, thinking about them or viewing them. And, I think that's really satisfying. And it's sort of, some people will say, well, it's, consumer versus VCs. And the reality is, it's just there aren't large enterprises out there putting out a 10-year roadmap on what needs to be built, why, and how that works in the long term. That's sort of painting a picture for a lot of people to get comfortable with how to approach crypto. What are the exciting areas? It's very much, grassroots, bottoms up, developer and consumer led. And that, forces us to be, very, very dynamic in how we approach sort of the evolution of crypto, but it also doesn't allow for tons of competition with lots of funds, just given some of those, dynamics and, some of the risk taking that people have taken, that hasn't panned out, and then others that has. So you kind of have this consolidation in the professional investing markets around crypto, that will open up again once, it's clearer that, things are working again.
Mm-hmm. I have a few follow-up questions on that. What do you look for in founders when you do calls with them? And then what's an area you wish would be explored more by founders that isn't really being looked at today?
Yeah, I think, especially in our pre-seed or in our seed program, we really think about T market products. So we're really looking for, founders that can articulate and sell a particular vision, and have some evidence to back that up. So, we tend to react best to data-driven, processes. Hey, we saw this is going on in AI, and we think that the way that Web3 could approach verifying inference could take 10% of all inference over some period of time. So we tend to react well to people who are able to actually like educate us and almost like change our opinion a little bit.
Right.
Like when I come into a call and say, well, here's what I think about this opportunity or this market, and they're able to push back on that, and in a data-driven way, that's just such a great signal. I tend to look for teams that have sometimes more than one co-founder, just because the balance of tackling both technology as well as market adoption in crypto has been very difficult. To sort of build in the open invites a lot of scrutiny, invites a lot of attention, and it's really a full-time job to kind of what people would frame as community management. So you're constantly sort of building in production, you're constantly interfacing with your early users and testers, and we haven't exactly ingratiated ourselves as the nicest bunch here in crypto. I saw people complaining about the size of an airdrop the other day.
Yeah.
And I'm like, it's an airdrop. You're getting a piece of a company for free. Like, what can get better than that? So those are some of the things that I think about as it relates to founders, and a lot of like venture comes down to pattern recognition around things that you've seen work, and sort of those dual focus setups have worked more than not. You think about Dapper Labs with Roham and Dieter. You think about Coinbase with Fred and Brian. You think about many other companies that have figured out how to tackle like both ends successfully in a very short amount of time, and continued that. I think about CoinFund with Jake and myself. We're perfect complements when it comes to tech, computer science, engineering, and my business and investing backgrounds. And a lot of that also comes down to ambition. Like, how much does this person want this to happen, and what will they do to make it happen? Because almost no venture that I've been invested in has not hit rough patches, and that is probably the hardest thing to test for when you're looking at new companies and founders. But it's usually what separates the big outcomes from the mediocre outcomes.
Yeah, for sure. I think, the crypto VC landscape seems to be showing signs of recovery. One of the last stories I wrote at TechCrunch was about how VCs were seeing that and funding is kind of coming back to life. Do you find that the market is more quote unquote founder friendly or investor friendly right now? And what's the timeline to conversation to you're writing a check? Is it competitive? How does it compare to other cycles? Kind of walk us through what that's like internally.
Yeah, things are heating back up, no doubt. Like 2023 was still the third largest crypto financing year on record, despite being 60 to 70% down from the prior year. So 21 and 22 were the activity was extremely heavy, and a lot of that actually came in the later stage rounds, seeing more 50, 100, $200 million rounds for ecosystems and base layers. So, activity never really went away, especially at the seed stage. There's just so much asymmetry in, what you can build in these markets. We have a lot of evidence of 5 to 10, plus protocol and company outcomes, given how early it is. And I think there's a lot of scrutiny on, Web2 startups having trouble IPOing. And, I think tokens have been a real differentiator for both investors as well as founders, to prove progress, on paper versus, hey, look at these couple metrics and what do you think the next guy's willing to pay, to help me, finance my company. So a lot of those factors have, definitely started to draw more investor dollars, towards crypto. That stat, I think last year was around 7.5% of all VC dollars went to crypto. Prior years was above 10. I think it bounces back, quickly above 10, if not more, as, crypto is kind of the most interesting thing with, I forget where I saw it the other day, alien-like returns for, some of the success stories. And, we certainly have seen, some of that. So but then when that filters down to the company level, as I noted earlier, seed rounds are cheap, easy to pull together some early investors, but it gets really hard after that, just due to the number of VCs that are focused on crypto, as well as the lack of later stage capital. So planning and being focused on what you want to do with that money is exceptionally important, and being able to show your investors that what you set off to achieve is what you actually achieved. So right now, I actually consider it to be perfectly balanced. We're seeing founders get the benefit of rounds being catalyzed faster. To your question, can someone get a round done in 3 weeks with us? From a first meeting, it's possible. Versus a year ago, there was no back pressure on needing to make quick decisions, and obviously VCs need to feel very comfortable to go through these one-way doors. So, rounds took a month or two, if not more. And, but, investors are getting the benefit of sort of the third drawdown, learning from a lot of the self-inflicted, issues we've had with governance, with, really having strong documentation to protect investors from, companies running off and starting the next token and not giving you, a piece of it, even though it's under the same enterprise value umbrella. And so I think investors are winning on terms, and founders are winning on speed again, and a little bit of valuation. The back pressure of token markets working again has good and bad implications. Over the past 2 years, it's been very hard to raise a round pre-token launch, right before token launch. Like, hey, let's launch and see how you do. And now with, some of the, the Binances of the world, OKXs of the world, having more focus on centralized token listings again, you're seeing a little bit of that back pressure. Well, I know when it launches, it's going to be X, or I feel good about it. And so people are trying to slot in, private rounds, sort of at least anticipating that there could be, a markup in a short period of time. And it's not really a game we play. We like to look at everything very objectively. We're taking a super long-term view. All our vehicles are structured with, up to 10 years or more of flexibility for how we want to work with companies. And so we sort of lean the other way, but it is, putting some pressure on prices, rebounding in the near term here.
With the valuations point, are early stage valuations kind of rising to that 2021, 2022 era levels? Or are we not there yet? What are you kind of seeing on that front? And then alternatively, on the other side, with like the later stage rounds, where are valuations in comparison?
Yeah, it's a good question. And I always, I always try to look for a couple of the examples on a fundamental basis. we're probably nearing kind of, some of those valuations, but it's all over the map. And really a founder has two key choices. It's find a great partner or put together a party round with a bunch of fast money, that's kind of thinking about the token strategy. And it's a tale of two worlds between those approaches. But it's a little bit self-selecting, for our strategy and for us, like we really seek partnership. We really seek, to be close to teams. We've built out an amazing platform team at Coin Fund here that helps to cover, talent, marketing, portfolio connectivity. Now that we have more than 100 companies that can all be learning from each other, working together, and selling to each other. One of the hidden secrets of tech is like tech sells to tech. So everyone's selling to each other, and I love seeing that within our portfolio. So I think that that's kind of where we are, and certain companies are being cautious this time around in terms of how high, how much and how high they want to push their valuations early on, recognizing that if there is a speed bump, things get really challenging. And so that's why I'm kind of framing it as a tale of two worlds, because I have seen, a couple deals that have reminded me of some of the froth of 2022. And then I see in the same day others that are, very focused on building into that, even though they feel like they could, raise at those levels today.
Which deals? Can you share?
Which deals? Well, I can tell you deals that we got excited about. Hard
the
to say.
Frothy ones and the ones that seemed reasonable, right? Yeah. Yeah, sure.
Exactly.
Which ones are you most excited about right now?
Yeah, we've done a couple, recently that, very excited about. We, led EtherFi recently on the premise that there was a major shakeup in staking, and really see them as a long-term winner, sort of the end state of asset management for crypto and specifically Ethereum to start. Just the, focus on what you can do with your crypto was starting to become more complex. It really required a bunch of risk management expertise. I can do this, but should I do this? And so I think that there's a lot of white space for someone who can really help, people analyze those decisions on a practical level. It's not like clipping coupons where, hey, if I can pay for my Uber ride with my Amex and also turn those into Uber points, I can get a 10% discount. Like this is, you're actually taking more risk in a insurance-like sense, the more you try to earn from your crypto, whether that's newer, more nascent smart contracts that haven't been hardened or audited, whether that's new projects buying shared security. So the landscape is changing, and someone like EtherFi, has been very focused on this, and has built a really great business. They grew just tremendously in Q1. I think TVL was up north of 30x, and they've gotten to $4 billion of TVL to assist with the yield management for. And staking is one of the use cases that has worked in crypto. Like it's found product market fit, and that's very exciting. Another area we're digging in hard on is in Telegram. We've worked and haven't announced yet some of our investments there, but I think it's one of the most interesting kind of consumer approaches to crypto that we've seen. On one
Telegram.
side of Telegram.
Okay.
So
go on.
They had to retrench. They tried to kind of raise a big ICO back in the 2018 boom. At that point, it felt a little bit extractive, like, hey, we're a giant social media platform, and we can build something big. But I love that they retrenched and they really let the community kind of build a lot of the infrastructure that they are now planning to adopt. And why I like it so much is, in the East, you have super apps, and they're great control points that people can build many different services into. But you live and die by what those platforms decide they're going to allow. And in the West, you kind of haven't gotten to the super app, framing, you've kind of gotten to like integrated applications. And these are, how do I just bundle more services into some of the distribution points that, folks are using, whether that's Facebook or, Twitter or others. But there's a big challenge in Elon's vision of, of building the everything app, which is, everyone has to trust that developer to not change APIs, to not change and reshape the playing field. Whereas what Telegram's doing is they're actually kind of sitting in the middle saying like, look, we're going to adopt a blockchain called Ton that the community has developed. We're going to build a whole bunch of tooling and services around that. We're going to let that wallet, sort of enter into the Telegram ecosystem so everyone can natively have a wallet, and they're moving to opt out, over the course of this year. So that's 900 million users that are going to get a crypto wallet, and they have to actually opt out if they don't want it. And then Telegram also has to deal with the back pressure of all these apps and services that people are going to deliver into Telegram are not necessarily exclusive to Telegram. So, any other distribution endpoint could pick them up. And I think that, sort of philosophical view, keeps the pressure on to do right by developers. And I think if you can do right by developers, just with all the, negativity and the, examples we've seen of how that can go wrong, then you have a lot of room to run. So when I think about, Web3 social, we've kind of seen a lot of, early social trial and error, whether that's DSO or, Farcaster. And what everyone's excited about in Farcaster right now is called Frames. And Telegram's doing that on steroids with, mini apps, ways that you directly, in your feeds can start to, integrate applications and, to products and services. And most people haven't followed it that closely. But one of their games called Notcoin actually went from 0 to 35 million users in 3 months and 6.5 million daily actives. These are numbers we have not seen in crypto yet. And just the approach is proving to be very powerful. And the alignment with sort of Telegram and the Ton Foundation and, some of the other key players that have worked very, very hard over the past, number of years to, kind of get to this point. I think we're just at the, sort of edge of a big breakout and starting to see, how consumers really want to use crypto, not, how existing crypto people want to find something else to use. And the reason, this is an exciting vision for me is we skipped the AOL era of crypto. We said, hey, here's a wallet. Now you go figure out what to do with it. And people started following people on X and, oh, my buddy's telling me I got to go do this, or, I heard in this chat I should go do that. But no one's even been onboarded to the basics. You don't have that home screen that's like, here's your email, here's where you shop, here's, where you borrow money, here's where you lend money. And so I think just creating this user container for people to actually start to navigate crypto in a way that they can find their own path and learn from themselves and their own journey is going to be so much more scalable than what we've seen, to date, with this nowhere to really point people in terms of like, how do I get started? What do I do? And the way people have come to crypto today is like, I'm excited about DePIN and I signed up for a DePIN app, so let me go look for the next thing. Or I wanted to lend money and earn 10%. Let me go look for the next thing. But finding a scalable, way into billions of people has been, sort of the Achilles heel of crypto to date. And I think that where Telegram's headed right now, is going to kind of start to give us some clues into, how people will use Web3 services at mass scale.
Right. I mean, Telegram has 900 million users and counting, and obviously not all of them are crypto users, but almost every person I know in crypto has a Telegram. That's how we stay connected. That's how we talk, And I'm sure our listeners know that as well. But when it comes to the idea of super apps, which you brought up before, do you see a world where Telegram does become the super app for crypto? I know that's something that Coinbase, Brian Armstrong said a while back that they wanted to become the super app. And I don't know if there's been any developments on that front, but with what's going on Telegram side and you guys kind of working or speaking to the team as well, do you see any indication that that is the roadmap? And do you believe in it?
I think that, there's a big power play to be the next super app. But I don't think that by adopting Web3, you're really going down the same, analog as like what we see with, WeChat and some others.
Mm-hmm.
I think you're really building a digital ecosystem. So you're really building something that allows people to access many, many basic services very easily, but it doesn't, it isn't prescriptive, and it isn't, it's not prescriptive, and it's not, sort of forced upon you. Like, when you're in a super app, it's like, here's the payment provider. So I think you'll see a lot more competition for some of the various use cases that will allow for long-term a platform that's much more focused on users than focused on the corporate interests of the platform. And that's where I think the challenging balance will be is, to really have that user-centric experience where every app is trying to focus on making the user experience better, not trying to figure out how to monetize those eyeballs, at the top co level. So the fact that Telegram doesn't own any of these mini apps and isn't necessarily directly benefiting from their distribution of them could make it sort of more powerful in the long term, but like different in this intermediate term where, they need to figure out. It's kind of like back to the
it's like
Libra Calibra days.
Yeah.
Sorry, what's that?
Okay. I was gonna say it's like decentralization and kind of what blockchains want to accomplish. Like the more people building on chain, contributing to the network, etc., it builds out the pie. And like with Telegram, if they have all these mini apps and the kind of areas that you mentioned, that could also grow to Telegram, even though Telegram's not directly doing it.
Exactly. But I think that we've already seen early tea leaves that this will be the monetization, angle for Telegram's long-term, sort of corporate ambitions. Like, how can I support these ecosystems and these builders such that I can actually earn more money? And, one of the dual business models they introduced recently was advertising. So as a Web3 builder or, community manager or just content creator now, you can both have transactional revenue based on Web3, and you can also introduce, lightweight advertising to, sort of augment, your kind of on-chain, transactional revenue. So just having two business models already sets them apart from, some of the other ways that people are trying to build businesses in crypto. And just because you have a mini app doesn't mean you can't distribute, your protocol or your service through another front end. So we're kind of trying to figure out what it all means in terms of how does that compete against a super app in its, kind of classic form today. Obviously geographical, regulation and, kind of the powers that be will continue to, probably try and keep people away from more of these neutral, democratic, decentralized environments because they are harder to control and understand all the data that's coming out of them. And that's where the US has been for a while. Like, privacy and regulation have been such a, big focus that it really hasn't allowed the US, tech companies to be a super app like we see abroad. But I don't think that's a bad thing. I have a tough time, sort of seeing how Coinbase kind of moves from here to there as quickly as a, scaled messenger or social media platform. But I think it's the right, philosophical approach. And I certainly commend them for, what they're trying to do with Base. Base is a significant revenue line item in the Coinbase financials now, which is, pretty exciting. It's kind of teaching people that owning this infrastructure, even if you're not, monetizing all the apps on top, like is a valuable, entry point. But Coinbase Wallet, I think, has just a lot of ways that they need to get clarity on how they can funnel their users to these services.
Right.
Like, for example, the best perps product on Base is probably going to be blocked for all US users. So how does Coinbase's user base, overlap with what, some of these products are trying to offer? And we'll probably see more in the gaming, vice categories and other, simple ways that people onboard to crypto, through something like Telegram than we've seen in, sort of the Coinbase and the Base approach.
Right. I feel like I kind of derailed the conversation. That's my bad. But one of the last major questions I want to ask you, Alex, was looking at the state of VC funding in crypto. Where do you kind of see it going this year? Can you give us any estimations or thoughts on what we should expect?
I think what's going to be a challenge is hopefully the market hangs in there and a lot of our peers can refresh their fundraising. It's been 2 years since people have raised meaningful money in crypto. Right. So it's unlikely to take a sharp spike up in number of deals, or at least dollars that we expect to be put to work in 2024 here. Talking to a lot of allocators, at recent events, they're really looking out to 2025 as well in terms of when they'll be putting meaningful dollars back into privates and venture, which then spills over into crypto as a subset of that. So I think we'll continue to see more activity than last year. I think we have some great use cases that people are fired up about. We're seeing Bitcoin hit new all-time highs, and I think the coast is pretty clear for a really great opportunity to build a lot of exposure over the next year. But I don't think it's going to run away from you. I don't think that the early stage market changes so dramatically over the next 12 months that we look back at this conversation today and say, oh man, if I could have timed the market, that was a much better time to be investing. We don't do that. We very much focus on just finding the best CEOs and companies and, partnering with them. And, we've been lucky enough to have a lot of resource to invest in this past downturn. And I think that'll work out great. But at the same time, I think with the lack of professional capital, that's now constrained, it's going to take a year or two to really see deal activity pick up meaningfully. We're seeing early tea leaves that, some of those strategics that we saw in prior cycles, exchanges starting to invest, other, entities that have more resource and, less, less overhead these days are starting to invest. So there is some, back pressure that's starting to, come into the market, as I noted, some of the short-termism around, tokens and, but longer term, I think we'll probably look at the numbers and kind of say, all right, we were up 50% over last year, which was down 70% from the year before. And we're back on track. But most importantly, we have so much more regulatory clarity now. We just went through a huge, reset, and regulators love to regulate at the bottom. So they made their progress, we'll make our progress. It's still a little concerning to see the Robinhood news from today and,
the Wells
sort of just the very brash approach to, sort of how everyone has their door open in crypto and wants to talk. But there doesn't seem to be, the most open, dialogue with, regulators. And so I hope that we'll continue to make progress there, but I feel like at this point, it'll be more of a tailwind than a headwind, stablecoin bills and other, things. So there's not a lot of reason to be on the sidelines now. The ETFs solidified that crypto's here to stay. It's just what form will it take?
Yeah, for sure. I feel like the conversation of regulation we could talk about for a long time, but That's a conversation for another day. Alex, this was absolutely wonderful. Can you leave us with a piece of advice that you've carried with you throughout your crypto career?
Throughout my crypto career, I've recognized that you cannot have FOMO. You cannot look at the past. You cannot change decisions you made. You cannot dwell on things that you did right or wrong. This is very much a marathon, and it's many, many small decisions that will, sort of keep you involved and create the big outcomes, for any one person that's focused on the journey. I'm so glad that when I was an angel investor, when I could first write a check and the government let me, invest in private companies, that I was investing tiny dollars and, scale that up over time and, really focused on, trying to make that transition to what it means to be a professional investor. But, for me, it's been, if it's not fun, don't do it. Don't stretch and try to do things that you don't understand, and focus on, the path to being right on lots of small decisions than putting everything on the line for, one big swing. It's just, I've seen the FOMO, I've seen the people, who sold Ethereum at $2 and, now are pulling their hair out. I've seen it all. So have fun and, definitely don't try to change the past, and look to the future and try to make lots of smart decisions.
Yeah, not FOMOing into things is definitely easier said than done, but I think that's advice
much easier
can
said
learn
than
from.
done. I can't tell you that week when CryptoKitties launched and every VC was calling me up, how do I get a CryptoKitty?
Awesome. Alex, well, thank you for taking the time to come on today. I really appreciate it.
Thank you so much, Jacqueline, for having me, and very excited about your future with the podcast there.
Thanks.